Well, there's been some big market moves, that's for sure, in the domestic market, and we're going to be looking at what the implications those have for small and big cap investors. And I guess, when we're talking about the moves, the federal election was central. We're going to be talking about what that means for big caps and small caps, and also where the growth and value is in small caps. Well, the election has directly benefited banks because I guess the removal of the uncertainty relating to franking credits is a big positive there. So we saw banks rally, but banks have also rallied for other reasons, like APRA's loosening their lending requirements of banks. And also we've got an interest rate that's on the cards next week. So we still look at banks as being cheap, and certainly that has boosted the outperformance of the blue chip portfolio, which has returned something like 17% in the past 12 months versus the benchmark, the ASX 200, which has performed 13.5%. Small caps are really at the centre of all this because small caps are basically about growth and diversification. When you're looking to generate the returns that are going to, enable you to pay for certain big events in the future, you need the kind of growth that small caps can provide. You need 10 to 20% growth. And right now, in this champagne drinking time, growth is being rewarded. But also what you need is to reduce that risk, because there is more risk for that growth, and diversification is the key. And that's, I guess, where small caps fit in. And it also fits in terms of paying not too much for that growth, which is where under the radar comes in, because we look for stocks that are potentially big companies, but you're not paying big prices for that. So it's the price that you pay. The small cap market is so diverse. There are so many areas, so many more different types of companies that you can look for value in small caps, and lots of them are under the radar. We inevitably find value, and we've had good success in the past looking for value in mining services because it is highly cyclical, but it does require you to high degrees of concentration, and that's where we're seeing some value potential. In the past, we've produced great returns from Alliance Aviation, from Macca, and from GR Engineering, because it does involve some patience and buying at the right time, so buying below NTA, which is generally a good way to start in this volatile sector, because you're not paying for any growth. So we've seen some opportunities where small caps are trading below NTA, so any news is going to really hit the share price positively. Small caps are about diversification. And one area where that is completely different from mining services, like mining services is about price taking from their big mining customers often, whereas medical technology and health services, that's not so much of a price taking environment. They're price makers, but there are other risks, which is why they're so complementary. And we've been able to luckily get onto some successful stories like medical developments, Clover and Nanosonics. But you do need to remember that there's high risk and there is some luck involved. But you've got to be in it to win it. And that's why when we do look for companies, we're looking for stability, we're looking for revenues, and we're looking for companies where that profit potential exists, but it's not in the price.